I haven't been bullish or bearish on banks, but in the past few months, the world has changed dramatically. Banks are currently running into problems that may cause short and long term issues. After all, banks are leading lenders to the struggling oil industry. They have exposure to massive credit card problems, and then there is the current recession and the problems that coronavirus may cause to the real estate industry. Can the big banks maintain their current dividend if economic conditions continue to decline? Today, we're going to look at Bank of America and JP Morgan Chase to see which is better, if either is a buy. So, let's take a look. On paper, JP Morgan and Bank of America performed fairly similarly in the second quarter. JP Morgan reported net income of about $4.7 billion in the second quarter, which was down about 51% from the second quarter of 2019. Bank of America reported net income of about $3.5 billion, down about 52% from the second quarter of 2019. Additionally, both stock prices are down by similar levels since the recent market low in mid-March. However, JP Morgan generated $4.7 billion in profits and set aside about $10.5 billion to cover potential loan loss. This was more than double the $5.1 billion provision Bank of America took. Moreover, JP Morgan now has about $19 billion of cash to cover loan losses built up over the past two quarters. In this regard, JP Morgan has an edge. When it comes to the dividend payment, there are greater concerns for JP Morgan since JP Morgan has a higher regulatory burden even though it appears to be performing well. Specifically, JP Morgan announced that it would have to maintain a higher common equity Tier 1 capital ratio. Don't worry about that too much, but this capital ratio has to do with measuring a bank's core capital as a percentage of its risk-weighted assets. In this Bank of America has more room. Thus, and perhaps indirectly, Bank of America's dividend seems to be safer for now. So in this regard, I give Bank of America the edge. And recently, Warren Buffett, through Berkshire Hathaway, seems to have tipped his hand by revealing that he recently invested another $813 million in Bank of America stock. And now again, following the earnings released by Bank of America, Warren Buffett, through Berkshire Hathaway, doled out another $400 million to buy more Bank of America stock. Overall, in my opinion, both stocks seem to be in good shape and are worthy of investment consideration. But before any decisions should be made, let's take a look at our charts. And we're looking at a 2-year weekly chart on both Bank of America and JP Morgan Chase. Now, Bank of America is this black line price chart, as you see here moving on through, and JP Morgan Chase is the red bar price chart moving all the way through here. Now, subsequent to the downtrend in March, just going back here to, again, 2 years, it looks like Bank of America might have had the slight edge. But subsequent to that plunge in mid-March, both stocks have moved up very slowly and very similarly. You can see here that they've moved pretty much together. Now, moving down into the volume looks fine. And in here to the MAC, you can see that the bottoming process did take a while, but it finally did. And the fast line moved through the slow line, and they're both moving on up. But they're still moderately weak at that -5. Moving on up, but they're moving very slowly. See the same thing there in the histogram. Into the price rate of change, you can see here that, and as I've indicated in previous videos, such as the overall market seems to be perhaps showing some signs of a topping pattern. So we'll have to watch that closely. But for the most part, they look good, but just be cautious. And here into the relative strength index, we're at a 52.02. It's not really all that great, but what does look good is the bottom there in March and then the continual upward progress. You see that upward progress here in the stochastics and certainly into the Williams again from that point on, moving on up. So we're just getting to this mid territory in a lot of these oscillators. So it's not real strong, but I think the overall market is improving, with the exception that we need to watch out in the short term for a possible correction. When you're taking a look at both Bank of America and JP Morgan, judging by the price charts, I don't think either has the advantage. So I think it's a coin toss, up to you. But as usual, conduct your fundamental analysis. And for today, that's Chew Dog Charts. Thank you.